Okay, let's talk about ETFs. I know we've all heard of them before, but they are such a great way to invest, especially if you're a beginner, because you don't have to pick the stocks. You can invest as little as $50 or $100 a month and have instant diversification. So instead of trying to pick the stocks and building up your own share portfolio with these volatile companies, you can just buy this one fund that has hundreds, if not thousands, of different companies already in it, so that you become a small unit holder of those companies. An ETF is an exchange traded fund. They are listed on the stock exchange on a market, and you can target different kinds of ETFs that target different kind of markets. And all it does is try to track the market rather than outperform it. So if a particular market is up, then your investments will be up. And if it's down, obviously your investments will be down as well. So the fees within that become extremely cost effective. They can range between 0.1 to 0.5%, which is super important to check because that comes off your returns. So when investing in ETFs, think of it like a supermarket. When you go into a supermarket, you will see a whole bunch of different produce, different kinds of companies and products stocked on the shelf. So you are basically buying that supermarket. You have instant diversification. So for example, everyone stops buying beef sausages because there's warnings around red meat and nobody likes beef sausages. Then that beef sausage company goes bankrupt. So if that one company goes bankrupt within the fund, it's fine because you still have hundreds of different companies holding up the fort, so the value of your investment doesn't go down that much. With these types of ETFs, you can track different kinds of market. You can track a local market. So you're going into an Australian only kind of supermarket where you have the top 300 companies in there. Or you can buy the S&P 500, which is the top 500 companies in the US rolled into the one fund. Or you can have an all-world ETF. It would be like going into a supermarket and seeing the best produce from around the world in that particular store. So I guess the hardest part, if you will, is actually choosing the ETF and how to make that investment. There are so many platforms that allow you to invest in ETFs. You can do it on micro investment platforms or a standard brokerage account. I tend to go for a standard brokerage account because I'm planning on growing my wealth within that particular account, and I don't want to be limited by any investment options that may not be available on some of these micro cap investing platforms. And then when you're choosing an ETF, it's super important that you read the fact sheet and the product disclosure statements and that you have an emergency fund. It is so important to have emergency cash so that you're not forced to sell your investments at a loss or during a volatile time, because we can't control what happens on the upside. We can only control what happens on the downside, and we can only control when we sell. That's my way of viewing ETFs. Hope you enjoyed, and I'll see you in the next video.